Hey everyone, in today's video we will show you how to use the Hauseit Co-op Maintenance Tax Deduction Calculator. I'm Nick at Hauseit. Check out our website hauseit.com to save money when buying or selling real estate here in New York City. So let's get started. First things first, if you're not already on the calculator page, you can get here by typing in the following address into your browser. The spelling is up above. The other way to get here is by visiting hauseit.com, scroll to Resources, Calculators, and select the Co-op Tax Deduction Calculator. The calculator itself allows us to compute two data points. One is the total annual co-op tax deduction dollar amount, and the second item is the tax deduction percentage, also known as the percentage of tax deductibility of monthly maintenance. We've already done a simple example here, and as you can see, the total co-op annual tax deduction amount is calculated by summing up the per share amount of mortgage interest deduction with the per share amount of real estate tax deduction and multiplying that by the number of co-op shares owned. So it's a simple equation. We're basically multiplying three different items together, and that gives us the dollar amount on the top right, which is $5,607. So if you were filing your income taxes and you qualified for a deduction, you would input $5,607 into your tax return to take advantage of the deduction. Now, the tax deduction percentage is calculated by taking that $5,607 figure and dividing that by the monthly maintenance times 12. And that's how we end up with 49.18%. Now let's ask a question. Why do co-op buildings have different percentages of tax deductibility? Well, the reason is that each co-op has its own unique property tax exposure and its own unique underlying debt structure or form of financing or other sorts of obligations on the debt side. One co-op, for example, might have similar real estate taxes to another, but one of these co-ops might have a huge loan with a high interest rate, and perhaps the other co-op doesn't actually have any debt whatsoever. So it would make sense that one of them would be paying out more in mortgage interest, which would translate into a higher percentage of co-op tax deductibility of monthly maintenance. So you may be asking, where do I find the per share tax deduction amounts for real estate taxes and mortgage interest? Well, it's a very simple answer. Every year as a shareholder, the accountant for your co-op will send out a Form 1098. And the 1098 provides you with the data points that you need. In front of us is an example of such a document. As you can see, it gives you a per share amount for real estate taxes and mortgage interest. Now, there's a whole bunch of other information here, which is pretty standard from year to year. It's just a bunch of disclosures, disclaimers about how all of this works, and to certainly contact your accountant for direct questions. But the actual mechanics are very simple. You take these two numbers here, and you dump them into the calculator, which we've done already. Now, if we want to go a step further, let's take a look at the actual income statement of a co-op and try to understand where we see the outflows for mortgage interest and real estate taxes. So here we've taken a few screenshots from real financials for a co-op in Lower Manhattan. The first one we're looking at here is a snapshot of a part of the income statement. So you can see revenue at the top. Interesting things for you to see are items like the laundry income. They have a commercial rent from a building downstairs, or rather from a unit downstairs. And in the cost of operations, you'll see under taxes that this building pays out a whopping $1.23 million in taxes on an annual basis. So this here, the size of that line item, is a large determinant of the percentage of co-op tax deductibility. Furthermore, under financial expenses, we see here that there's an entry for $78,000. So this doesn't say exactly interest payments, but based on the other items in the income statement, we think this one is most likely representing what the co-op pays out in mortgage interest on an annual basis. We can learn more about the underlying debt of a building by looking in the notes of the financial statement. So here we have a snapshot of the notes for mortgage payable. And what we see here is that there is a mortgage of $2.5 million. Now, it also tells us basically the monthly payment amount, but it also tells us the interest rate. So that could give you a sense for what sort of debt the co-op is carrying. If we go further down, another snapshot from that same note, we see that there's also a line of credit. So they have a $1.5 million line of credit, and whenever they draw down the funds, the interest rate is 1 month LIBOR plus 2.75%. So there you have it. That's really how we understand mechanically why there is a tax deduction for co-ops. Co-op pays out real estate taxes and mortgage interest, and because the co-op itself is the one who's responsible for paying all interest and all taxes on behalf of shareholders, it only makes sense that the shareholders themselves should receive some sort of deduction for this outflow. So going back to the calculator, it's really all you need to calculate the dollar amount of tax deduction and your percentage of tax deductibility. A couple of notes about the calculator: you can email yourself the results. You can also print a PDF or save it down. And before we let you go, we would love to also remind you that we have a number of other calculators on the Hauseit website. Two big ones. One is the buyer closing cost calculator. So that is super helpful. Closing costs for buyers in the city are really high. They're anywhere from 2 to 6% depending on property type and whether or not it's new development. But this gives you a very nice itemized explanation of what you might expect to pay. And you have similar functionality for emailing it and saving down a PDF. We also have the seller closing cost calculator, which gives you a nice snapshot into what you might be paying as a seller here in New York City. For example, you can customize broker commission amounts. Hopefully you negotiate those down. You can save up to 6% through a service such as Hauseit's assisted FSBO listing platform. And of course, you have other closing costs as well. You have potential flip tax, you have transfer tax, attorney fees, and the like. So please keep these in mind as you navigate the rather complex industry, which is the New York City real estate marketplace. Thank you so much for watching. I'm Nick at Hauseit. If you have any questions or comments, leave us a comment below on this video, or you can send us an email to team@hauseit.com, and feel free to give us a shout if you're looking to buy or sell and you're interested in saving money. Thanks again for watching, and we hope to see you on the next one.